right? So in this live session, we will be looking an in-depth understanding of how the market structure is doing, and then we will be looking into the entry. Now, before I progress further, welcome back. I hope that the stream is staying well, and this is where, as this is a pretty important trading day, pretty volatile day, as we are looking at this market structure here for another potential big drop here. This is a series of lower high market here that you can see in this resistance line, and in that series of lower high, expecting the price to respect that level and then continue to drop. Lower time frame price action that you can see as we trade on lower time frame, the market is currently bearish in that area. Welcome back to the live session, and the timing as we are progressing with this NY session. Looking forward to see that every member are here before we look for another setup in this market for this potential drop back below here in that market. 1 hour price action, as we can see, this is the 1 hour bearish market, and there is a breakdown here. The market is still showing up to be bearish, and this is the key level that you can see the market may potentially to retest and then return again back below. We are looking at the multiple time frame analysis. If the price is going back up here to cross this high, we are looking for another possible break below here in that market. And every trade that you will be opening, there must be a reason that you can look at. If you look at the 5 minutes price action, and this is the 1 hour resistance line that you can see the price approaching currently at that level, and which is pretty important key level that you can see in this market. The market approaching now from the 1 hour perspective, the price action is showing up to be strongly bearish here at the moment, and that break above is currently approaching another important level that the market is approaching, and the price to retest and then return again back in that area. Where the market is heading at the moment, this is the 1 hour market structure, where the price is approaching that key level, where there is a high area of value, and looking at the 1 hour market structure approaching that key resistance line. And in that key resistance, the market is approaching that level, where you can see the price is approaching that important level of resistance, expecting the market to respect and then return again back below here in that market. With that being said, what we are looking at here, a stronger bounce back to the upside as the price is approaching another key level of resistance line. From the 1 hour that you can see, the price has dropped initially, and this is a bear market. Therefore, approaching this market to the upside is an important level that you can look for possible return again back below here in that market. Looking at the 1 minute chart, the price has crossed this resistance line, and it left an imbalance in that direction here. Now we see that it's a long term now. For the intraday perspective, it's a bear market. 4 hour chart, if you look at, you can see there was a previous session, there is a pretty bigger bearish engulfer, and that bearish engulfer that you can see on gold has given a stronger momentum for this possible drop down here on gold. And that's where looking at this market structure to potentially cross that high and then to return again in the direction of the major trend. We are looking at this market structure to retest and then return again back below to create a new lower low in that market. Before we begin progressing with the current market structure analysis for an entry, traders, if you're ready for this analysis, make sure you like this stream and also subscribe to the channel. If you haven't done yet, press the notification bell so you're not missing any of the content that I'm posting every day. A significant bounce here on the lower time frame. With this bearish rejection here in that market, as the price action here maintaining this series of higher low, expecting this market to potentially trend back above here to cross that high, and then there's a bearish fair value gap that you can see in that area, which potentially to break below here in that market. So we'll be using the pending order. Once the market managed to break above here, we see that there is another bounce back to the upside, and it is maintaining this downtrending market structure, which is expecting the price to continue to drop back below. Are you ready for a pending order here? It's a downtrending market structure, expecting a rejection back below to this market to create a new lower low here. We'll be explaining later the strategy behind it. The market is pretty volatile, so we need little wider stop loss for an entry, as the market is showing up to be potentially upside here back above in this area. We'll be placing a pending order here, which is sell stop. If the market break below for this fair value gap, to cover that fair value gap, we will be looking into the entry for this potential drop down to nearly to 100 pip drop back below in that market. We'll be placing pending order at this imbalance with a stop loss above this structure for a potential 87 pip stop loss. TP target we will be taking here, the first one, and then we can extend further if we need it. So this is going to be a sell stop order. You can see the market start to drop here. So sell stop at 4029. I'm going to enter by market. The price already dropped to that support level on the lower time. It started to drop and it didn't even wait for a possible setup. Start to drop here. So I am going to enter by market with this trade for this drop back down, which is a market order that I'm placing for a quick drop here. So we place the sell stop here. We place the market order. It's a sell by market order and expecting the market to drop back below to test that support. We saw there was a breakdown on the lower time frame after this break of structure back above. It's a significant drop. I'm short on gold here, waiting for a possible downside back below, and also shared the same trade in the previous one. Sell trade running, and we will be looking for even the next one once we see the market has given us enough move, as we are looking for the first trade to hit for this session, which is now showing up to be bearish. This is a pretty volatile market, so we will be taking here up on 48 pip and going at that drop that we can see. I am out with the running profit. The first trade was close here. I am with 47 pip taken profit. $47 pip up. There is a drop and you can see the market is pulled back now. This is why I'm out with the trade. There will be more. We'll open multiple positions. This is the first trade that I have opened and we have taken 47 pip. Before I look for the explanation of the trade, the education behind the trade, first of all, I'd like to see that the members are here. If you guys have opened the trade, if you open the trade, smash the like button and say that you got profit or no. If you haven't opened the trade, also smash the like button because there is a lot to take from here. Have you got the profit? I've shared in the premium group as well, and the profit is taken. Welcome. All right, so it's just the beginning. We started the session. Still, whole session is remaining here. All right, so we still have a lot to take from here. We still have quite a few trade potentially to take as soon as it appears in the market. The only thing, guys, support the channel by liking the stream, and also don't forget to subscribe. Smash the subscribe button and also hit that like button, right? And now, as if you look at here, this is currently bear market, right? And in that bear market, this is 1 minute chart. If we see that the market has hit that key level again, we are on the trade. We will be looking for the key level where we can find the best trading setup possible in the market. We are looking at the level where there is a high area of value. This is, if you look at the 5 minutes, you can see that it's a pretty massive bearish price action here at the moment. Breaking above here could be a very important area that we can look for selling opportunity. From the 1 hour, it's a bear market. After this previous bearish candle, this 1 hour price action as well has created that another move back to the upside. So if the price reach that high and crossing that level, that is what looking at this price action, expecting the market to respect that level and then to return again back below to the direction of the trend. This is the current support level that we can see on gold, And in that support level, what we can expect the market to trend and then continue to drop back below to this support level here in that area, which is significantly bearish at the moment. And any trend here breaking that high, giving a probability for a drop in that market. There's a bearish engulfer here in that area that potentially could break below further down here to create this new lower low in that market. This is what we are looking at the price action to show up that downside move here, to break that low here, to create a new lower low in that market. Now, how we can see the market structure currently has been created. If you look at with this break above here from this structure, this is the 1 hour market structure that you can see the market from this resistance line. Here is the level that you can see the price approach that key level of resistance where there is a high area of value. And in that key level of resistance, the market could potentially drop back down here to that support level. From the intraday perspective, that you can see the market is approaching, this is a complete bullish fair value gap as the price approaching that order block that you can see here. And as there is a bullish fair value gap, if you look at this whole zone is a clean bullish fair value gap, and in that bullish fair value gap we could see the market to continue to drop back below here to this support level in that market. And that is what we are looking at in this market structure, the price to potentially continue to drop back down here. And we see that pullback. If you look at the 15 minutes price action where the market to potentially trend back up here to that zone where there is a high area of value. Lower time frame price action breaking that up here, and that is what we are looking in that market to see the price to go ahead and cross that level, grab the liquidity, and then to trend down here to this support level. Expecting the market to trend and then continue potentially to break that low here. And this is a 1 minute bearish engulfer that you can see in that area, which is pretty stronger bearish price action. And in that bearish engulfer that you can see, this is the 1 minute price action. Prices cross that high and potentially crossing that line below again, as it is a long-term bear market. There is a significant breakdown and approaching the market to go ahead and break that high here, which is going the market to test that level and then return again back below with another wave of drop in that market where there is a high area of value. There is a head and shoulder pattern formation here in that market, And as the market trend, if you look at the first trade that we have opened right now, just in this very smaller zone, if you look at, it's maintaining this downtrending market structure. And as it is in a head and shoulder pattern, we could see that potentially coming back here to this support level, maintaining and respecting the head and shoulder. We could see the price to continue to drop down here back below to this key support level, where there is a high area of value. And that's where you can see the market is trending. And that trend is quite important to see the price to continue to drop down back below to this support level here in that market. The bearish engulfer here that on the lower time frame, this 5 minutes price action has showing up, and with a 5 minutes bearish engulfer formation again going to the market is trending here, breaking that low potentially back below to this support level in that market. So we would like to see the price again moving for another pullback here, the price to potentially retest that high again, and that could be another wave that we can expect this market to trend back down here in that area, which is to look that the market to continue to trend. And this is the 1 hour market structure that you can see the price action is showing up to be significantly downside in that area. Now, from the bigger picture perspective, where we are looking at gold today, today's low has been tested again, and there is a significant drop in that market. What is the fundamental reason? Do you have an idea about this drop on gold? Buy zone around 4010. Come on, guys, this is now falling market. All right, so it's a strongly falling market, and you don't know how far it's gonna drop, right? Because if you look at this market structure that you can see, it's a now strongly falling market, and that could bring that market almost drop to this level here, or even, you don't know, it might straight drop back to this monthly support level. If you look at the pullback, looking at the Fibonacci perspective here in that market, for those who have joined later, guys, we just secured another trade after the previous 2 trades, all of them closed in profit. Now we are on another position that just have closed in profit. The market is now breaking back below. Let's look at the Fibonacci pullback here, where we can expect this market to drop down. Now, before we look at the Fibonacci pullback, guys, also make sure that you like this stream and also subscribe to the channel if you haven't done yet. Now, looking at the Fibonacci retracement in this market, starting from this here, that you can see, starting from that level, there is a bounce here in that area, and in that bounce that you can see the market from this support level, there is a move, a complete back to the upside here. The price is approaching the first 38.2% Fibonacci level, and it could lead to even 61.8% or 50%. So we can see that levels where it matters. Now 38.2% is a very important Fibonacci level at the moment, because this is the minimum pullback and also it is below the previous weekly low, which is an important support level here in that market. So with that 38.2% Fibonacci level, if we look at the daily here, that is where the market from this support level has got a bounce back to the upside, form a double top. So with that double top that you can see, the market is slowly breaking that low here in that support level. And 4-hour chart that you can see, this is the 4-hour price action. The previous sessions was a massive bearish engulfer. If you look at the high of this candle, what do you see? That multiple liquidity. So this green candle is a clean liquidity grab, has given stronger momentum in that market, and therefore this drop here is very high probable that the market will drop further back below to this, where there is a order block, weekly low, and also the Fibonacci pullback. That means 38.2% Fibonacci retracement in that area, which is nearly to 450 pip in that direction. The market is coming back below here in that support level. Now, to find best entry opportunity here, what we would like to see that the market approach another resistance line. This is the 1-hour price action, and so far from here, the previous session, you guys have seen that we have taken the massive drop to the downside. Now in that breakdown with this crossover of that 20 EMA, the market has shown that it is about to create further downward momentum. That means to create a new lower low in that market. Now if you look at all those 1-hour candle, all of them red, what we need here is either to test that hourly high or break from that structure, creating a narrow green candle, because it's still maintaining that series of lower highs. Starting from here, every hour the market is maintaining series of lower high. That matters because there is a lot of order above this level that can give you stronger liquidity is the key. There are 3 secrets in the market structure, liquidity, and price action. When you know that, you stay in the edge, you stay at the top of your trading cycle, right? That's where the secret, understanding when to enter and where to enter. Break of structure is where the smart money coming in the market, because when the market breaks from the structure, again it's the trend, that's where you are looking for an entry. So the current level that we can see, 4043 level, is where very important area of value that we are looking for an entry opportunity in this market. Let's look at the lower time frame here, how the market structure is evolving. Now look at this 15 minutes price action. There's another wave that we have seen a breakdown from that level, where leaving a very key area of value at 4043 level, where there is also a very stronger liquidity sweep in that area, where there is a 15 minutes 10 EMA, along with also there is a liquidity here in that level, expecting the market to test and then to return again back. So let's drop down to the 5-minute chart to see how the market structure is forming. The current level that we are looking at, 4044, breaking that high could be a very important zone that we're looking at to enter. Now you guys see that how the multiple time frame is so important to enter the market. Every trade that I open, I do share all the trade that I am opening along with the strategy explained for each trade. This is some of our recent trade that opened in the system. You guys can see that this trade 300 pip, right? One single trade 300 pip using the multiple time frame. Now look at the multiple time frame analysis here. Okay, so which is very important to look at that multiple time frame, and that's where the secret of becoming a a successful trader is to trade based on the multiple time frame. Why multiple time is so important is because that is where you can get hold on to the major flow in the market. That means looking at the directional bias in the market. So that being said, looking at this market to go ahead and hit any of this key level, as this is bearish fair value gap, expecting to hit that level and then to drop again to the direction of the major trend. So we are approaching this 1 hour candle close. We have 10 minutes to go for this, and before the candle close, hitting that 4044 level, an opportunity for us to sell back below here. Ready to enter again. Risk management is key. If we are entering, must be looking at the risk management, which is absolutely important. We'll be back in just a matter of 2 minutes. Waiting for the entry. All right, back in track here. So you can see some kind of consolidation in that area. And that consolidation that you can see here could bring that market further back. We are just has seen that a 1 hour candle close with a doji in that area. And with that doji close, the market is now, if we look at closely, we can see that in that area, this is the 1 hour resistance line, expecting the market to drop down here back below to the support level. And that is where looking at this market to give an entry opportunity here in that area. And where with this bounce of that level, the market is approaching that 10 EMA. And also with that 1 hour, the 50 minutes 10 EMA, along with also that key level that the market is approaching, they're expecting the price to test that level and then to revert again back below here in that area. Now, looking at the 15-minute chart here that you can see on the intraday perspective, this is currently bearish. And if we closely look at the 4-hour price action, so far tested this high and got the rejection back below with a bearish engulfer formation here in that market. And that is where the price action is showing up to be significantly downside here in that market. Expecting to break that high and then potentially to trend back below in that market to this support level. Breaking out here, potentially to the upside, 4044 level. Have you taken the first trade? Can you go down to 3950 tonight? Do you think? Okay. 1 minute triple bottom. Baba Tanna. We could see that significant drop on gold here, which is very likely to see that tonight. This market. At the same time, looking at that level, 4-hour chart, this is the 4-hour market structure has formed. 3950. Very possible. Because this is a significantly bearish. Now, if we look at this 4-hour market structure, what do you see? There is a very important pattern that we can look at. And what level we can look for sell here also important. Now, you guys look at here, you can see there is a double top here, right? And this is a pretty deep double top. The reason deep double top is You see that when double top is created, there are some ways they are created. If you look at a double top, okay, now you might see a double top like that, right? How the double top is created is important. If you might see double top like this, that's a very significant double top, because when this breakdown happened, the market has gone back to the upside again. If you look at the high of those candlestick pattern, it matters. You see that exactly from the same level the market has got rejected. Some of the clues that will give you a clear understanding. And the market created the double top starting from straight from this low here. And there is this pattern here that you can see has very unusual criteria or the attributes to it. And that unusual kind of pattern will give you a bigger drop. And that's where you need to look at, because firstly, the double top is exactly the same level, probably 1 pip, 2 pip, 3 pip difference. Secondly, when the market bounce off that level, straight from this order block to that level. Thirdly, there is a big drop here. The market has gone back up again, and it's a pretty deep double top. So when the market creates that kind of significant structure in this market, when the market creates that kind of significant structure, we are looking in those structure for that market to show up to be highly moving this market. And that is where we are looking at this market for the price to either to come back to that order block or even to drop down further below here to that support level where there is a high area of value. And that is what we are looking for the entry. At the moment, as the market is bearish, if you look at the previous 4-hour candle, it is big bear candle, right? And that is reflected on the next move that you can see in this area. And that's what you can see the price on the 1-hour chart. The price is approaching that high here, which is crossing that level, moving that back to the upside. On the 1-minute chart, the price has reached that resistance line, created a new higher high, and looking to see that the market managed to break this level and creating a new market structure. This is support down resistance here in that area. And with that support down resistance, expecting this market to respect that level. This is the 15 minutes price action, either to close as a long week candle or going up further and then to return back again. This is a high, very high liquidity zone, and there is a big bearish fair value gap. If you look at in that area to nearly 160 pip bearish fair value gap. And the best zone that now we can look for selling is this support, which is turning resistance, and then to sell along the way. And that's what looking for an entry in this market. Crossing that high from a pretty long bear candle, and with that movement, expecting the market to trend and then continue to trend back below potentially to the support level. This move here is a straight drop bounce to that key level of resistance line. That rejection from this higher price here bring the market back below to this support level. And with that 15 minutes pin bar that you can see in this market, that's a pretty long pin bar here. With that 15 minutes pin bar, the market to test that 10 EMA, and you can see this slowly rejecting back down here to that support level. And the current resistance at 4044, expecting to test and then to return again back in that direction here in that market. Okay, so you can see again the price is approaching that key level, and with that approach to that key level, that where the market is going back up to that zone where there is a, this is pretty bigger fair value gap, and in that fair value gap the market to test that zone and then to continue to trend back below here to that support level in that market. Welcome to the live session. For those who have just joined, we have secured our first trade in this session after the 2 trades in our previous session. We look forward to open more position as throughout the progress the market is moving. This is what we need to look at when we are trading, a market that is moving. And that is all that secret, to have higher volatility. And when there is a higher volatility, there is a possibility for trend continuation, because you see that some market sideways such as dollar yen here now on the 50 minutes, so you see this is in a sideway, and trading on a sideway market, you see that the market trends only 30% of the time. It says by textbook, but I think that the market trends, if you can't calculate exactly, but the market trends 20% of the time, 80% of the time the market range. And when the market start to trend, you'll see that more often it's very difficult to spot when the market will break out from the trend. Because as soon as it start to trend, it started to move so fast that before you make your trading decision, the market change again direction and start to move in a sideway. But there is a way to trade the trend. How can you find the market that is truly trending? Do you have an idea? Because once you can spot a trend continuation or a break from the trend, you started to see that how the market would be moving accordingly. So trend continuation is very important to look at in a market, and that you can understand from the break of the structure. That's what the secret is. Looking at the market that has a breakup structure. That means trend continuation and then break from the structure, moving again back in that direction. Trend continuation, break from the structure, moving again in the direction of the trend. How can you spot those breakup structure? And that's what we discuss here. We'll be progressing more with in-depth education and understanding of the market structure. While we can see the price already, this is the intraday candlestick pattern from 4-hour chart. So far, it has made significant downside move here, and it could continue to drop further. We are seeing now on a pullback, and this pullback that we can see is very important to see. The price is going back up again, retesting that level here in that market, and expecting the market to go ahead, feel that FVG, and then to rebound again back in that market. So that is what we're looking at in this market, to go ahead and fill that zone and then continue to trend back down. That being said, here is the key resistance line that we are seeing the market is approaching. And in that key resistance, the price expecting to break that high and then continue to trend back up. Breaking that high, filling that zone can give us higher probability to sell this market. So why not buy if we know gonna go back to support level? Why not buy? Okay, that's a very important question. I really like that question, because that is where the answer will come. Why not buy if we know it's gonna go back to support above? And that question will give you a big answer of a trader's psychology. Guys, this is, I'm really emphasizing a lot to understand. You see, there is a quantum physicist called Schrodinger. Okay, he has explained a thought experiment called the Schrodinger's cat experiment. Okay, it's a very important, famous thought experiment. Now, in that cat experiment, Schrodinger said that imagine a cat in a box. Okay, and when you see a cat in a box, then if the box is closed, what is the status of the cat after a few days? Now, if you look at, as if you make a survey of 1,000 people, you will see that nearly to 500 people will say the cat will die because it's too long. Maybe probably 500 will say the cat could alive because cat is very resilient. If you throw a cat from the like from 2-story building, it still can run away from this. So that's a conclusion, right? based on certainty. Our brain is designed to go draw a conclusion instantly based on some information that we had in our hand. That's how the brain works, straight going to the conclusion, either black or white. But according to Schrodinger is saying that the cat is in superposition until you open the box. Can you think that way? The cat is in superposition until you open the box. That means the cat is live and dead at the same time until you open the box. So that means if you think the market, if we know the market will go to the resistance or the support, then why you not buy? Because the market still didn't go to the support. If the market still didn't go to the support, it may go and may not go at the same time. So if the market is in superposition, then why we say that the market will go to the support? It's a probabilistic speculation or a prediction in the market. And that probabilistic prediction is trading. In trading, nothing is certain. When you open a sell trade or buy trade, we open based on probabilistic prediction, not based on certainty. But if you open, because the brain, that's why you see some trader take a suddenly big risk. Most trader does this because the brain works that way. For example, when you have a lot of confluence, and let's say a trader thought that, okay, there is a learn strategy experiment, everything's done, open sell, and suddenly got some further confirmation from other sources the market will drop, and the brain suddenly triggers a certainty of drop. Then the traders increases the risk, thinking that, okay, this market will drop sure. Then why should I not take 10%, 20% in this trade? Without thinking that it's a probabilistic prediction. So therefore, we only will be opening when the confluences supporting with a higher probability in the direction of our bias with proper risk management. For example, trend will be, let's say you place a pending order here, for example, in that level. Now the question might come, okay, if I place a pending order here, then why am I not buying this market to go there? Because you even don't know if the market will go there or no. The market might go up to here and then drop, or might go here up to and drop, or might go there and may not come anymore, continue to rise. So if you sell from, if you buy from here, then probably it has gone little bit and then drop, or it has gone there and little bit drop, or it didn't go there, from here it start to drop, your pending order become expired. But when you set that level to sell, if the market goes there, you place a stop loss here. Now you have an edge that this market will drop. It's an edge. That means with a probabilistic, let's say if you open 100 trade from here, if your risk reward is even 1-on-1, out of 10 and out of 100, probably 70 trades will drop from that level, and then you are remaining profitable in that way, staying in the side of the probability. I hope that the best way to know that. There are more education here available. If you guys not on the website, you can visit the website. There are more education available on the website. You can click right now and then access it straight away. Read that, become educated, become good at it, and become a good trader. There is a lot of information from there you can access. Below this video, you can visit the website. Then got it right. Thank you very much. Thank you, sir. Sharing insight. Welcome. So how long did it take you to be profitable? Okay, that's a very another important question. I would like to ask here the same question, and then we will be going to what I'm thinking here. Okay, let me ask with a pull, right? So let's ask as a pool, because there will be two options. One is over 3 years. Do you think over 3 years or under 3 years? Because everyone not on that same level, but what's your speculation on that? Good evening, welcome. Okay, here the market is maintaining this structure in that area, and which is on a sideways market. If you look at, this is a consolidation. Okay, in that consolidation, looking at this market to grab the liquidity and then continue to trend down here to that support level. From this level here, the market is making its way back to the upside to that key level where the price is approaching that resistance line, and breaking above is very important point that we can look at. With this lower time frame price action, the price has tested that high and then continuously breaking that low, that below. That is what we're expecting the market to trend down here to this support level. And that movement that you can see in this market for the price to potentially continue to drop down here to that support level can give us significant rejection back below for us to sell this market, and that's what we're looking at in this price action. If you look at the 15 minutes, you can see that it's now fourth candle creating a double top here, and with this candle close we may see that this market again, this is the 1 hour price action, the 30 minutes also showing pretty big bull, and in this zone expecting that this the next candle potentially to bounce off and then to return again back below. So there is a possibility for here for the market to cross this high and then to return again in the direction of the trend. 15 minutes, that is pretty significantly bullish here at the moment in that market that you can see on the lower time frame, and that's a good area that you could see the market to potentially trend and then to return again back below to the support level. Even it is possible for the market to go back again 4 hour resistance, as it still have 1 hour 30 minutes for this candle to close in that area. Okay, crossing that high, we see just the market has broken above that level, which is currently has managed to break above, and that break above is where the market currently has reached that key resistance line. Lower time frame here, that the market structure is creating that that momentum back. This is a purely fair value gap if you look at, and there's nothing here, and it is possible to cross that and then to return again. And as we mentioned earlier, it's in a downtrend, so we are not buying that market in such a falling area. We are looking for the market to go ahead and cross that and then to return again. That's why we open our previous trade from here, and it has given the profit that we need. Now at the moment you can see this is structure crossing back above again here in that area, and in that area the market is potentially breaking that high, possibly to cross that high and then to revert again back below to the direction of the trend. Okay, you can see that's where the market is approaching that fair value gap, and we want to see that it has done enough move back to the upside, tested that support as a resistance, and that is where the opportunity for us to go short or long in this market. Now the smaller candle represents that from the 15 minutes. If you look at, all of them are smaller candles, so that represents that at any point this is now overextension in this lower time frame trend, and from here you saw the drop pullback. So it's in a downtrending market structure creating series of lower high. Series of lower high is very important, and this is the recent lower high here, and also the 4-hour resistance line. In case the market is approaching that 4089 and that level, if the price is crossing that high before this 4-hour close, that's a great opportunity for us to potentially sell this market to this lower time frame, to this support level. That move that you can see the market slowly building that momentum back above here, this is where there is a pretty important imbalance in that area, and approaching that level, creating that zone here, expecting now to, this is now overextension, which is essential for us to see that the market has created the overextension, and we will be using pending order once the price action confirms for possible confirmation, that probability created for possible downside here in that market. And I'm going to the 1 minute chart to see this is now a trend here which overextend from this key level of resistance that you can see, which is support and resistance. And below this area, this is where we are going to use a pending order here in that market for this price to potentially drop down back below here in that market. And that is where, if you look at this fair value gap, you can see the market has disconnected back to the upside. And if the market drop down here, there is this zone, if you guys look at, it is a pure imbalance. So once the market managed to break this low here, it is highly likely that it's gonna catch that bottom here. So the pure imbalance here in that market is to this support level, which is 120 pip. Okay, and we want to take that move once the market managed to drop back below here. So to take that move, we are going to place a pending order for this potential breakdown here in that market. We will not be taking along this area, which is also essential zone, but we would like to take that move here for possible downside in that market. And from the 1 hour perspective here, this is currently moving back to the upside, and we are look to see that the price has managed to drop in that area. Now this uptrend may go even further up, as this is a zone where the market may go ahead and retest and return again. So breaking that low is where there is a possibility for the market to trend and then continue to drop down here in that support level on gold. Now there's a local upside bounce here, and we are looking to see that drop down. We'll be using the sell limit order here, sell stop order in that area. We see there is a bigger gap in that area, and with that gap, once the market managed to drop down here, this is where there is also it may continue to rise here as there is a fair value gap, but we are not going to go long here, as any point we could see that reversal back below to this support level. So our entry to the direction of the trend, breaking back below to this support level, is where we want to enter this market. And so it's gonna be a sell stop order for breaking below. This is what we will be setting for 50% profit target. The rest of the 50% we can take back below here for another potential drop. And that's what I would like to set in this bottom here, in this support level, to this low, that the previous swing low here, which will lead that market to back below here to this nearly to 3 to 1 reward to risk, 2.5 to 1 for that move will be pretty stronger move in that direction here on gold. So we'll be setting TP, the full TP at 4,003.26, but we might be able to secure earlier profit partially and then running the rest. 4,003.26. Welcome back to this live session. So the market has overextended above as we discussed, and then now we see the potential break below in that area and expecting the market to trend down further down back below here in that support level. And that is where we're looking for this market to test that support and then continue to trend back down in that area. And this is an imbalance in the market. Would like to see the price to break below and we will be entering into the trade. The key here is to trade with the trend. That's where you are looking at 15-minute chart. Pretty strong bounce back to the upside, quite a few 15-minute candlestick pattern, expecting it to trend back down again to this key support level here in that market. So you can see there is a red candle formation. Now again, the same question comes, we are not selling from the top is because you want to see the market has broken the structure completely, change its trend from this local uptrend to merging with the global and local downtrend. Global trend is very important to look at. What is the lower time frame trend? How it is merging with the higher time frame trend here in that market. Now it's approaching this support level here on Go. It's the 15-minute support, okay, which is turning resistance along with the 15 minutes 20 EMA. If the market goes up there and shows significant bearish rejection from here, we might be able to enter by market for the drop if the price action shows that confirmation like we did in our previous trade as well. So we are waiting with patience, that I mentioned in our previous session also. The patience is the most important virtue of a trader. If you have that enough patience, you guys have seen how many trades we have opened, and almost there's only one losing trade this week so far. So many trades we have opened, and we have now above 450 pip net gain this week after minusing that one losing trade. And that's where the actual trading happens, right? So far, that one strategy stand out in my trading completely. That is trend following strategy. Now we had, so far, if we look at the total sum of pip that we have gained so far, net 422 pip so far this week, just this week, in addition to many of the trades that we have opened in the past. And trading is a part of game. it is in fact to look at always from the higher time frame perspective. It's very important that you look at the lower time frame and higher time frame. The strategy that I'm using, very precise and in detail with clear rules in it. Now all those trades that you guys have seen also open in this live session. You guys can go back to the session, go back to the live, see the real trade that you have opened in the market, right? And everything is based on the information, right? You saw that all those win in the beginning of the week, including this one, dollar-yen trade, one break-even trade. Just today, 3 trades. In first session, 40 and 60 pip. This session, 47 pip, just few minutes ago. And I would like to on and on. This is only just, today is still Wednesday in my zone. Coming Thursday, we still have, including today, 3 trading days. And that can scale up much more further back to the upside. Trading is easy, right? It's not hard as long as you have the right strategy. And of course, guys, you must journal your trade. The market start to drop here. We place the pending order. There's a breakdown happened already. Pending order is on. The market might trigger the trade very soon. Okay, we are nearing to hit that entry. Expecting it to break down. Okay, we are active on the trade. The trade is on, another one on gold. Expecting it to break below here. There is a imbalance in the market. And this is 1 minute price action. Expecting to break that fair value gap. Though we see there is a direct move back below here. And all right, cool. Wanna get that down back below? There's a missing bearish candle formation. Will not take very long here because there is a bigger drop and there is a here on the support in this market. Want to see that a complete breakdown below from the 15 minutes price action. The candle is closing and awesome. Boom, 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 breaking back below 50, 62 people. I'm taking profit right now. Close trade. Fast in that move. $62 pip taken on this single move. Another big one, guys. Are you with me? Say yes if you have taken with me, because it's a pending order. Everyone should be in the same page. If due to the time delay, few seconds, if you haven't got that many pips, still the market is on the profit area, and I see that it's still moving down, and everyone should be in the same page. So yes in the live chat, embrace that we are on the really a great area that the market is moving. Now, there's an overextension back below here in that market, and that is where, if you look at the lower time frame, this is the 15-minute chart here, where there is a bearish price action in that market, and could see the price to drop down here to that support. We're looking at that market to trend back below. This is the 15 minutes price action that you can see the market has made its move back below here in that direction to create a new lower low in this market. This is a complete down move here in that market, and that is where looking at this price action. Now, before this 15 minutes close, okay, we see that there is a deeper pullback here in that market. Now breaking above here is another potential liquidity sweep here, and so the market is in another liquidity sweep. This is a big move that you can see on the lower time frame. On the 1 minute chart, the price has reached that 4-hour resistance, and this is a fair value gap. The price approaching that level again, and that could make the market to drop back again, back below here. This is the 1 minute price action, and that 1 minute candlestick pattern with this single move back to the upside has crossed that key level of resistance here, that you can see the market is potentially to we could see the price to return again from the key level. And that break above here, creating a significant trading opportunity here in that market, and where the price action to show up to go ahead and hit that level. So this is an imbalance in the market that you can see. Okay, crossing that high, and now the market is approaching that level, support down resistance. It's purely now breaking that 4-hour resistance, and that could bring that market to again back below to the support level. So that bounce off this level is an important move that we can see in this market, which is purely a pullback now. Crossing that zone, which is one single move back to the upside, and this is a pure liquidity area. All right, so now in the meantime, I would like to see how many members have secured this trade. It was a quick call, quick gain. Welcome to the trade. Thank you. Welcome. Yes. Now, very important that guys, when I'm going out, that means there is a possibility for a reversal, and I go out with the running profit that we discussed. So now, if we look at here from this support level, the market is crossing that above again, leaving this support. This is a bigger support, has not been tested yet properly, and that is where I'm looking at for the market to test and then return again back below in that area. We got trade in open here, and we see that there is a 1 minute chart. There is a 1 minute bearish engulfer formation from this key level, looking to see that this market has tested this support as a resistance. Are we going to see a rejection here? Let's see how the market structure is being built. With this bearish market structure formation here, with back-to-back two smaller red candle, expecting the market to trend and then revert again back here to this support level. Now we see this is a resistance line on gold, and that resistance line has completely violated to the upside, and it has broken above. Now with that break above this resistance line, we might see that this market to come back again to this order block. There is an imbalance it left here. So now for us to see when the market is getting that reversal back below to this support level, right? That's where we will be on the trade again. Now this move upside is for me not a very stronger bullish reaction, rather it could be stronger liquidity sweep for another breakdown below here in that market. So looking at the 15-minute chart that you can see, if you look at the daily, where the market in relation to the daily level, this is daily bear market. Now we see that it's a long-term bull, but we see back-to-back 2 days the market is in a downtrend. For our chart also showing up to be bearish here in that area. From the lower time frame, the market structure showing up to be bearish in that area, and that is where that you can see the market is showing up lower time frame price action to be bearish. So we see if the price here reverse completely back below, change the trend, that's where we are looking into this entry in this market. This is a previous swing low here, right, which is support support, turn resistance, the market on a key area of value. Now from this, we are looking to see the market to continue to trend down back below here in that market. Back to back two rejection here in that area. Are you going to see the market to drop down now for this possible downside in that market? And there is a possibility as two significant bearish rejection in that area on this market. That could be a double top forming for a possible trend breakdown here, for a rejection back below to the direction of the major trend. And that is what looking at 15 minutes candle closing with a pretty long weak candle here in that area, and looking to see that the market potentially to trend and continue to drop to the direction of the trend. This is a 15 minutes candle close coming, and that market, if we look at, has this bullish, this green candle that you can see on the 15 minutes is a pretty a rejection from this zone here, and it has filled that FBG, it has filled that imbalance here in that market. So there is a higher possibility for this market to trend continue to drop after this 15 minutes candle close. We'll see that where it is heading to at the moment. Candlestick pattern, pretty big candle has formed. Now it is possible, as I mentioned, that the market to straight come back below here to the support level, as it is possible to form a potential head and shoulder here in that market to drop that price back below. Right, so we are looking at this price action here in that market to potentially drop down here with a bigger long wick candle, and that drop could bring that market to break below if the price action shows to be significantly bearish here in that market. If this market fails to create a higher high, there's a very higher chance of creating a lower low here in that market. And if the market create a new downtrend, that could bring that market to back to this daily support level. There is possibility for head and shoulder creation here. Very unusual price action that we can see has been formed here, and that sometimes create this kind of price action for a possible reversal formation. So this market could break this support. That means with that head and shoulder, the market could still come back down back below in that direction. So you can see that if it is forming a head and shoulder for a break below, that's gonna give us a really good move in that direction. But this is a locally still an uptrend, so that's why it's a very important zone to look at. But if the market continues to drop back down here, it may straight come back to this order block. And if it doesn't, then we might see that the market to possibly cross any of this previous high here. Now we are looking to see where the market is heading. 15 minutes market structure that you can see, and if this 15 minutes candle straight drop back down here, there is an imbalance here in that market, and that could bring that price well below here, even create a new lower low, because this market currently, the market has tested this level, and there's a potentially a head and shoulder is being created here. If you look at here, you can spot that head and shoulder being created. All right, so that's the market is creating now that head and shoulder, and that made that market to potentially trend down back below here to this support level. And in that support, the market is now crossing that zone, crossing that threshold back below. Now once it confirms that downtrend, when it start to create a new downtrend, we can look to sell this market in that direction for this break below, because it's a downtrend and the possibility, as you mentioned earlier, to drop down is higher, as there is this 50-minute candle could act as a catalyst for again trend continuation to come back down to 4,000 level. Got a rejection in that area, which is pretty long candle, and now it's on a support level. This is the key here. If this is a break of structure and trend continuation back above, we might see that bouncing back to the upside, but we see back to back two rejection here, followed by a head and shoulder formation. The possibility for a trend change is also higher here. We'll see that which one gonna play out in that area. We had trades, guys have seen that now. Patience is very important to remain profitable over the long term, and we would like to keep that on. If you guys look at the 15 minutes price action, that you can see with this candle, a chance for a drop down here to continue to drop back below to the direction of the trend, and 30 minutes candle closing also, few minutes, 5 minutes also coming to close as a long bear candle with this back to back to after this doji. There's pretty much bigger bearish price action here in that market. After a long consolidation, we see that here 15 minutes on dollar yen is having a breakout here. So that means dollar yen trend is bullish. We saw that there was a support test and the market again having a breakout on dollar yen. So dollar yen going up means that DXY is still bullish, while gold might just do the opposite of that DXY. That means possible to remain downside here in that market. And from that area, this is the 5 minutes price action. Quite a few long week candle formation in that area, which is the market is remaining that bearish here. Pretty long week candle that also forming on the lower time frame, back to back two dojis, that giving a possibility for continuation, guys. This is where now with a long weak bearish candlestick pattern formation here in that market. The way the market structure is building here, it is a possible reversal confirmation in that market. Now, that means breaking below, it requires to break below because it still can break above. If it breaks above, that is where we might see that further trend continuation. But if it breaks below here, there is a clean fair value gap up here to nearly to 150 pip down here. So would like to see the market has given us enough confirmation before we look for an entry, because it's on a consolidation here. Welcome back to this live session. We have our previous session and we are running the second session, and as with the progression of the NY session and also with the progression of the week, this week is the most important week as a trader, right? Because this is the last week of the month, though you have the next week. Which 2 weeks you think that there has been the most amount of trades taken? Which are 40. So over 3 years, under 3 years. Okay, so over 3 years is what ideally to be profitable as a trader. It took me 3.5 years. Probably I'm a slow learner. The market is approaching that FBG here, and planning to trade is the key. So you can see that 50 minutes candle close with a big red bear candle here, and pretty long bearish price action in that area, which is a doji. Trying to cross that high. Now this is crucial here. This is crucial. You want to see that market. If you look at here, you can see one bearish engulfer, one bearish price action that currently breaking that after this bounce off that level. and that is now creating pretty big head and shoulder pattern formation here in that market. So that's a big one here. You see there is a long wick doji, and they're creating a rejection candlestick pattern here from the high. With a complete breakup structure in that market. All right, so that's where there is a pretty solid bigger structure has been created in that area, which could lead to become a bearish price action in this market. And with a fair value gap here, third minutes candle close, and here with this 1 hour price action as well. That is to say that the market on the 15 minutes also forming a big long wick candle, and if we look at the 5 minutes price action, cross that high again, and the market might be preparing for a some move here. That's why I haven't got that entry yet. We need to see that the fair value gap is broken. Pretty big bounce here. Pretty big bounce back to the upside in that market, which is signaling possible further bounce in that market, and that could bring the price back up here for another move that you can see. So looking at the 4-hour, again 4-hour market structure, that the price action is closing in few minutes with a pretty long doji, and that move that you can see on the 15 is going back up to that resistance line. Which is showing a pretty strongly upside in that market, and that could bring the price back up here. So it has completely broken above. If you look at the daily price action from this daily support level, now reviewing the lower higher time frame price action again for overall direction to see what the market is going. Is the market is reversing back again to the direction of the major trend, or we are looking to see a pullback and then rejection back down here. From the weekly, if we look at the market has now here rejection from this very weekly low here, and that weekly low is this support. Now, there is a very possibility that this market to cross now that 4-hour high, and then the market to potentially to test again, or if it wants to reverse, straight bounce back to the upside. So this is where the buyers and sellers are not sure. That means there is a confusion in the market. Is the best way to wait for the market show again to direction. And this week, as well as the next week, is in fact, if you look at the calendar, so tomorrow and Friday is dollar CPI day, right? And then euro coming up to important news on Gbpjpy as well. On dollar, we'll see that 5 high peg news coming on Friday here. Thursday 3 and then Friday 2, all together basically on one single day on Friday, coming up 5 high impact news. So that will absolutely make the market pretty volatile, because 5 news is big news, and then followed by week after will be tremendously busy because of the FOMC. And at the moment we see the market is reflecting those news. So from this zone we can see the price slowly breaking above to that support here in that market, above to the resistance in that market, and that is what we see, that the price to potentially continue to rise back here to fill that imbalance, and then to bounce, or we could see that return again. Until we see the directional bias here, we are looking for next move, that means reversal or trend continuation. Anything can happen at the moment because the market in a zone where it could continue to drop, it could bounce back up. Once we see the market has shown us that directional bias, we are back on trade again. So far we secured all the trade that we have taken fastest way possible. Now coming another trading live in tomorrow. Again, I'm coming up live twice, as you know that, as one in London and one in NY session. I'd highly encourage you to watch all of them to progress, as there is a lot we discuss here in that live session that will change the year you look at the market. That being said, thank you for joining here, and I'll see you again very soon, trading again live in the market.